Google recovering a little bit after yesterday's fat finger moment. Good morning, I'm Rolf Winkler, and welcome to the News Hub. Of course, that fat finger moment came Thursday when its earnings report was accidentally published early by the company's filing agent. But the timing of the report was less problematic than its contents. Evercore Partners analyst Ken Sena joins us now. He says the 8% stock drop that followed is actually an opportunity for investors to scoop up Google shares on the cheap. Ken, good morning.
Thank you.
So let's break this down. I mean, first of all, the culprit for the bad quarter, it wasn't Google's business. It was currency and Motorola?
I think I break it down as those two factors primarily. I think that mobile is still a concern for investors, and I think on the top line, you're going to see the deceleration. You're going to see a continued sort of pressure on paid click pricing. And so mobile seems like it's the likely culprit. But I think actually when you sort of peel back the onion a little bit, it does seem like it's much more a case of Motorola as well as the currency impact.
Okay, but actually let's talk about mobile a second, because we know what Facebook has said. Basically, as users gravitate from their desktop PCs where the online advertising market is more mature, where you can charge more money for it, as they're gravitating to their smartphones, their tablets, where the advertising market is less mature, the monetization actually decreases. And I mean, that same impact should be hitting Google, or not?
I don't know, because Google is a little bit of a different business, where Google can capture a lot more of the intent behavior on the user and can make its platform, I think, more usable to the user as far as what they want to find and buy, etc. So I think their position is better in that respect right now, at least. Also, Google provided a run rate on their mobile advertising in the $8 billion vicinity.
But that $8 billion number, I mean, they changed it relative to, they set a run rate of $2.5 billion a year ago, but now they're measuring it differently.
They changed the definition slightly to include content purchases, apps, the Google Play, but you know, when pushed, they'll say the vast majority of that number is advertising. I think if you compare that to what Facebook said on its earnings call, it was trending at about $500,000 a day, so roughly about $350 million or so a year, compared to $8 billion for Google.
And yet, even despite that mobile strength, you could actually see in their net revenue, Google's net revenue, the growth continues to trend down. It was about 17% year over year, the net revenue growth for Google standalone outside of Motorola. But again, a lot of that was,
I think that the currency. If you look on a consolidated basis, it was about 600 basis points. I think we were expecting about 200 basis points of growth to be affected by currency. The company's position was, look, the dollar strengthened against a lot more currencies than it has in the past, and that kind of represented sort of the outsized impact. If we adjust numbers for that currency, Google's core business came in roughly in line with what we were expecting. I think there's another issue which we've talked about a little bit, which is that Google made a lot of site changes over the last several quarters.
Talk about the product listing pages that you've mentioned are particularly interesting. It almost makes Google look a lot more like Amazon. That experience.
Exactly, and I think Google is trying to figure a way to get more information from their merchants so that they can provide better listings that convert better, and then ultimately, drive more money into search. I think that what they started to do in this back in April was make these changes. Third quarter was one of the first big quarters where this was rolled out. It's not clear that Google actually charged for these ad formats, but in order to incentivize marketers to adopt them, Google essentially gave them very prominent real estate, which would be where the normal sort of sponsored links would be placed. So
you see them on so if you do a search for, say, boots, product search on the upper right-hand side of the page, you end up seeing image ads. They aren't the standard kind of text links, and the idea theoretically is that you can make more money on these kinds of higher value ads in the long run.
And Google said on the call yesterday that these have about 176% better click-through, that they convert at about 100% better. So longer term, we see this as a positive for Google. But the trial just ended about 2 days ago. So now they can actually start charging for these ads, which they might not have been doing in the third quarter. So that headwind, at least, we see as reversing potentially for them going into fourth quarter. And I think the other two major factors that we talked about, Motorola and currency, I think are somewhat cyclical and temporary. And so as we sort of break down the results, nothing makes us feel worse fundamentally about the business. And so we're still arguing that it's worth stepping into, especially now.
It was kind of hilarious how this all played out yesterday with the release that came out. R.R. Donnelly, the filing agent, published it accidentally. You could see there was something problematic. I know George Stahl, our editor, looked at it and he said, wait a minute, the obligatory positive quote that's supposed to come from company executives, what was up there, it said, in block letters, pending Larry quote.
Right.
So, and of course, there was a Twitter feed, we have it on there, somebody came up with a Twitter feed, pending Larry, right away, wanted to get it out there before Kara Swisher scooped us. How's it feel now, Kara? That was one of our favorites. Shout out to our All Things D colleague. Now, but joking aside, I mean, what was the surprise like? I mean, for you, where were you when this happened, and what was this really grabbed the market's attention?
We were actually in a meeting with our CEO of Evercore Partners, and so it was a small conference where we just got together to actually have kind of an update on the business, and the news came across, and I think it was
pulled
shocking.
you out of the meeting with your company CEO.
With the company CEO, exactly, and a little bewildered because it was just not like Google. I think I didn't expect them to miss as badly as they did. And B, just in terms of how it was handled was surprising too, in terms of the release not being completed. So it was a little bit of just being caught completely by surprise.
It almost works out because we had a little bit more time to digest it.
I know, I like that part of it.
These tech companies that report, I mean, it makes our lives pretty hard. It comes out at 4:05, or you got half an hour to digest it fast before an earnings call.
Exactly, and I think it's, while the numbers people were concerned might not have been complete, I think it was nice to at least have a chance to digest it a little bit longer before you got on the earnings call, to be a little bit more thoughtful about what you wanted to hear from management. I think the fact that Larry was on the call was a big positive, and I actually think they laid out. I think they laid out the space pretty well in terms of how Google sees itself ultimately competing, and I honestly didn't come away feeling worse about their positioning than going into the quarter. I just think it's for internet analysts modeling hardware businesses, it probably, there's some room for improvement.
Ken, briefly, we got to run, but you think it's a buy here. That's an opportunity. The
I do.
stock has actually run a lot even before the 8% drop yesterday. In 20 seconds or so, you think this is actually a buying opportunity?
I do, and I think that one of the two clear things came away, I think, recently from Facebook and Apple, and that's that search is harder than probably people expected it to be, and that Maps is also pretty critical, and that Google is very well positioned there. And I think when you look at what they're doing in terms of the site changes and moving closer to merchants, capturing that inventory, and ultimately making that inventory very searchable in kind of a local setting through mobile, I think Google is probably one of the best positioned out there in mobile right now.
Okay.
And I think the run rate supports that.
Ken, thanks so much for joining us.
Thank you.